Welcome everyone to the Watchlist, a webinar series for ASX listed companies to pitch to real investors so they can be considered for their watch list. Our job is to showcase companies that are on your watch list or to give you some ideas of companies you might want to put on your watch list. As we know, being on your watch list is a big deal. Today, we've scoured the ASX and found 4 companies that you may not have heard of previously from a range of sectors who we believe have compelling investment propositions. Presenting today are Elixir Energy Limited, Allup Silica Limited, Immuron Limited, and Strickland Metals Limited. Remember, this webinar is interactive. We want you to ask questions of the presenters. We want you to delve into their stories and learn as much as you can. So while they're presenting, think up some questions and submit them using the Q&A button at the bottom of your screen. I would now like to introduce our first presenter. Elixir Energy Limited, ASX code EXR, who will be presented by their Managing Director and CEO, Neil Young. Elixir Energy is an ASX-listed gas exploration and development company. It is currently primarily focused on an exploration and appraisal program targeting natural gas in the form of coal bed methane, or in Australia, CBM, known as coal seam gas, CSG, in Queensland, Australia, and the South Gobi region of Mongolia. Neil, over to you.
Thanks very much. It's a pleasure to be here. This presentation is very much focused on our current Queensland operations, and so I'll whiz through that and obviously welcome any questions at the end. Next slide, thanks. So here's the macro overview for natural gas just now. Really 3 separate themes that are relevant to the Queensland operations. Firstly, the desired energy transition is very, very hard. Getting to net zero by 2050 is going to be really, really tough, and gas is not an optional part of that journey. It's a necessary part, and all credible forecasts indicate demand should in fact grow over that horizon. Now, liquefied natural gas that's exported from Australia in various locations, including Queensland, where we are. A recent forecast from Shell indicated that demand here should also rise, particularly in Asia. And Australian security of supply is valued in particular by our allies such as Japan and South Korea. On the east coast of Australia, a gas supply crisis is imminent. Government actions have arguably made things worse. What that means is that current prices are probably more than $12 a gigajoule, and that's expected to be a long-term floor. Next slide. So we're in the Taroom Trough. That's a deep part of the Bowen Basin. The Bowen Basin's a massive Permian-era basin that has delivered for Australia over many, many decades. It has some of the world's best coking coal, some of the world's best coal seam gas, and as we go deeper, we believe it could have some of the world's best tight gas. The Taroom Trough is deep. We're about 4,000 meters here. There's known to be an awful lot of gas here. The challenge is getting it out. We're immediately adjacent to infrastructure. The Wallumbilla Gas Hub is Australia's premier commercial and infrastructure hub for gas. It connects to the export plants in Gladstone and to the southern markets. So accordingly, pipeline costs are minimal compared to competitors that are further away. And as an active oil and gas province for many, many years, arguably 100 years, there's community acceptance of what we do. And the onshore service sector is effectively immediately adjacent and can be accessed within hours rather than days or weeks. Thanks. Next slide. So Gladstone LNG plants were constructed and they were never quite full. And indeed now the coal seam gas fields which supply those have arguably peaked and are in decline, and we have a graph here commissioned from an industry expert that shows that decline will rapidly accelerate. Now, brownfield economics means that these plants should be supplied in priority to developing greenfields plants elsewhere in the world. So various operators, including us, but including much larger parties, are now targeting such opportunities. Thanks. Next slide. So here's a map of our area. We're calling it an energy super basin. That's a concept developed by Wood Mackenzie. This is where big money wants to go. It's where not only petroleum exists, but also carbon capture and storage and renewables. There's substantial renewable investment in the area, and that's likely to grow. carbon capture and storage in Queensland centered on this area. And last year, we were pleased to do a deal with Origin Energy, whereby they contributed towards our well costs in exchange for data obtained for CCS. So the key is to reinforce that we are where big money wants to go. Thanks. Next slide. So there's a lot of energy infrastructure here. It's not a remote location. There are pipelines. There are significant electricity transmission lines. There are multiple existing gas-fired power stations supplied by the now peaking coal seam gas fields. There are new gas-fired power stations planned, such as at Cogan Creek. And indeed, the growing renewables in Queensland will require more and more gas power stations, particularly as people realize that pump storage is expensive, difficult, and environmentally challenging. Next slide. So going back to my key point, if you're a junior in a capital-intensive industry like gas, you want to be where big money is going to want to go. And the best source of big money is big companies. This is a favorable location. Now, why? Big companies are already there. Shell is our immediate neighbor. They're drilling just now. Big companies go where others are. It's lower risk from their point of view. Natural gas is a bit of CO2 typically in its raw contents, and CO2 here is low. That is vital for big companies to be interested. Big companies go where there are big plays. This is material. There's many trillions of cubic feet of gas in place here, and money can be deployed in the hundreds of millions, if not billions of dollars. Sovereign risk is low. Queensland's obviously one of the best places in Australia, and Australia, notwithstanding its federal faults from time to time, is still one of the best places in the world. Now, as an onshore unconventional play, investments can be toggled up and down. This is not a $5 billion FID Gulf of Mexico type play. It's got flexibility. Next slide. So multiple operator activity I've alluded to. Shell are currently drilling there in a 3-well horizontal program. There's at least $100 million being spent there. Santos have acreage to our north and south. We signed an agreement to data share over wells with them. We have a junior neighbor to our southeast who's booked a large resource and who plans more activities later this year. Now, multiple operators doing multiple things mean the more chance of cross-learnings and the code being cracked. If I add up all the work being done here by Shell in the past and by current operators, this is a $500 million play, which is significant. Next slide. So Daydream 2 is a well that we drilled last year, and we're now in the process of stimulating and flow testing. It's got multiple objectives. We targeted 500 meters of gross pay in the Permian. We beat that. We looking for multiple horizons to stimulate tight coals as well as tight sandstones, and we found them. We're now in the 6 stages of stimulation phase. We've confirmed that CO2 is low. We're evaluating liquids content. We've undertaken a lot of scientific work. We're getting R&D support from the federal government here. Contingent resources already being booked, and we will come back to those with independent certification in the months to come. We expect a material uplift based on the work done to date. We've gathered data here. This is a very scalable development to 500 wells. It's just a notional amount. It could be a lot more. Next slide. So late last year, we had a welcome surprise. We got free flow of gas into the well. At our sort of depths, which are very, very deep and tight, that's never been encountered here before. We logged a lot of pay here in the tight sections. We free flowed gas from 4,200 meters, and we begged the question, is this another Perth Basin? Next slide. So we took samples from the well, we took them to a lab. We analyzed why did this deep formation flow, and we found scientific analogs with the Perth Basin, namely clay rims on the sandstones which preserve porosity in these deep depths. We confirmed the very low CO2. We discovered very high gas contents in the coals, and that led to a material uplift in our prospective resource booking. And once we flow those coals, we'll be moving that to contingent resources. Next slide. So initial flow test results from this free-flowing zone, it's called the Laurel Sandstone, were impressive. This was conducted after a suite of defits and flowed at a stabilized rate of 1.3 million a day, a maximum rate of 2.3 million a day. The gas was dry without indications of condensate or water. We reaffirmed low CO2 again, and now we're moving into the next stage of stimulation phase. Next slide. So we believe a new play is being proven. At 4,200 metres, this is the deepest sustained natural flow of gas in Queensland, or indeed anywhere east of the Perth Basin in all of Australia. This is a pretty exciting play. Our neighbours are watching what we're doing. The industry generally is watching what we're doing, and a lot of investor interest has come in recently. Next slide. Here's a graph that indicates the sustained flow rates that I mentioned. Those are good shapes for gas. Everything is explainable. The data gathered is valid and will flow through into our updated contingent resource report and possibly reserves report in the months to come. Next slide. So here is our timeline for project delivery at the start of this year. Everything to date has gone to plan. The oil and gas industry can be tough and things can go awry. We've built in contingency for that successfully. We're now in the final stage of Daydream 2. That is stimulation and flow testing. That will follow in the balance of April and May, and results will therefore be due within weeks or thereabouts. Next slide. So in summary, the world needs a lot more gas for a lot longer, and LNG markets themselves are growing. In East Coast Australia, we have very strong pricing, a growing and imminent supply gap, and an ability to supply LNG trains, which has spare capacity. The Taroom Trough in the Southern Bowen Basin is exceptionally well located to supply those markets. Now, there's a growing need for energy security and a key role for gas in the medium term, and that's exemplified by gas buyers from the likes of Japan and South Korea wanting to buy more Australian gas and wanting to own Australian molecules upstream. The Taroom Trough is hosting a multiple operator appraisal program to date. It's one of the most active areas in Australia, featuring majors, medium-sized Australian companies, and juniors such as ourselves. An early success with a stabilised flow rate has already been achieved, and more will follow very immediately. That's it for me today on our Queensland project, and yeah, hopefully I've met my timing, and questions welcome. Thanks.
Thanks, Neil. Great presentation and clearly doing some important work there on the East Coast. Have got quite a few questions coming through, and a couple of them I'll read verbatim because there's some positive feedback here from a couple. I've got, "G'day, Neil. Thanks for you and the team's efforts to date. Can you tell us, is there one of the stimulate stages that the team are most keen to see a great result from?"
Well, it's like asking who's your favourite child, so it's a difficult question to answer. I think, to be honest, one of the probably lower flowing zones will be the coals, but because no one's ever flowed them before, that is possibly the most exciting. It can convert very significant prospective resources, start moving them into the contingent resources. It will indicate that the gas in place in the coals, which in our block alone is probably 25, 30 TCF, you get a small amount of that out, and it's a lot. And so that's very exciting. But as I say, that's the slightly favoured child, but we love all our children.
And how does Grandis rank as a new supplier to the East Coast gas market compared to potential competitors?
Well, I think a key point is a material potential competitor is now nearly finished, and that is Twiggy's been building an importing plant in New South Wales at Port Kembla. That has an ability to take a lot of gas into that state. He's invested hundreds of millions of dollars into that. Now, when that gas comes in, it will cost LNG costs plus the costs of regassing. That's a $20 gas price right there. Other competitors, exist in far north Queensland or indeed in the Northern Territory, and I wish them all the best of luck. But I also observe that they are further away, and distance comes with cost.
And just talking about prices, maybe a bit of crystal ball gazing here, but what are the expected gas prices on the East Coast?
I mean, typically they're now in the region of $12, $15, and all, I think, respected forecasters expect that to be sustained. There aren't any magical sources of low-cost gas to come onto the market. Demand has been reduced in some respects, but otherwise demand can grow, for instance, in gas-fired power stations, which in my and many others' views will be required to stabilise the grid as it has more renewables come into it.
A good question here. Are there any community issues with respect to your activities in the Taroom Trough?
I mean, this is one of the best places in Australia to have oil and gas. I think the first well in Roma was drilled probably more than 100 years ago. The Mooney oil field, which lies immediately proximus to us, have been producing since about 1960 or thereabouts. There's a lot of coal seam gas activity. There's a lot of communities here which have benefited a lot from that investment over the years. So there is acceptance over multi-generations. There are economic benefits, and accordingly, as I say, it's a really supported industry in the region. Now, we do respect the environment and those communities, and that's part of our job, but we're not facing people who've never seen what we're doing here before.
Last question. Funding. What does funding look like going forward?
I mean, we have a reasonably decent balance sheet just now. As I noted in our presentation, we have R&D support from the federal government for this well. We've got an advanced finding on that. We've got the ability to secure debt on that, and we've got a facility in place to do so. We're investigating potential partner opportunities with some pretty interesting counterparties, and we would expect some contributions on the fiscal front from any such deal in various ways. So we're feeling pretty good about this just now. Naturally, we're a non-revenue company, and we have therefore a number of avenues to pursue to deal with these matters, which we are doing so.
Great. Thanks, Neil. That's all we have time for today. There are a few further questions which I'll pass through to you so they can be answered directly with those investors and potential investors. So really appreciate the presentation. Enjoy your day.
Thank you very much.
Thanks, Neil. So now I'd like to introduce Steve Lydeamore, Chief Executive Officer with Immuron Limited, ASX code IMC. Immuron is a commercial and clinical stage publicly listed Australian biopharmaceutical company with a proprietary technology platform focused on the development and commercialization of a novel class of specifically targeted, I'm going to get this one wrong, so I apologise, polycyclonal antibodies that we believe can address significant unmet medical needs. Steve, over to you.
Thank you. Next slide, please. And the next slide. Quick overview of the company. So we're listed on both NASDAQ, IMRN, and ASX IMC. You can see that we're a little bit unusual for a biotech company that we have not only clinical programs, so 4 clinical programs, but also 2 commercial products, one of which Travelan is sold in 3 countries around the world, Australia, US, and Canada. We're quite advanced in our clinical program. So Travelan is in 2 clinical trials at present. We just read out top-line results on a phase 2 controlled human infection model study in ETEC, that's enterotoxigenic E. coli. And we're planning to get our clinical study report completed June, July, which will be submitted to the FDA. And following that, we'll have a FDA phase 2 meeting with the view to moving into phase 3 next calendar year. The other studies are a little bit different in that the Uniformed Services University is running this. So they're the sponsor and they're funding it. It's a phase 3-like trial, called a phase 4 trial because they're using our current over-the-counter product. And they're comparing this in a placebo-controlled trial in US and UK military personnel travelling to high-risk regions. And just updating the numbers here, last time I updated this, it was 50% of target. We're now up to 64% of the target 866 military personnel. The other program is Camp ETEC, and this is Campylobacter and enterotoxigenic E. coli. A similar trial to the Travelan trial. It's a phase 2 controlled human infection model study, studying healthy volunteers that have been volunteered to be infected by Campylobacter to see whether our Camp ETEC product can prevent that from infecting them. That's due to read out in June, July top-line results, so upcoming milestone there. The product Travelan that we're currently selling on the market, and I'll show you a slide in a minute, is growing very strongly. We came out of almost 0 sales during COVID, which is not unusual for a travel medicine. And we're up more than 100% last financial year. And in the current financial year, we're up another 154% again. And you'll see the graph in a minute. It's quite impressive. We're evaluating options to enter into new markets, international markets. likely the UK market will be first, and also to add other products into our portfolio. I won't go through the financials or the shareholders. You can read those at your leisure. So next slide, please. There's a little bit of detail down the bottom here, which I won't go into, but these are the types of bacteria that cause travellers' diarrhea. And you can see the ETEC, Enterotoxigenic E. coli, is the largest, and a number of others there, so Campylobacter and Shigella and Salmonella. Travelan has activity against, and that's why the US Department of Defence is so interested in our product. They also spent a lot of money with us through Department of Defence grants doing preclinical research showing the cross-reactivity of Travelan against a broad number of different bacterial species which cause problems for people travelling to high-risk regions. This is a big market, so it's $1 billion market and it's growing quite strongly. And on the back of increased international travel, people that travel to these regions can expect somewhere between 30 to 70% of the time to get traveller's diarrhea. It's not something that any of us want. So high unmet need for a product which there are no currently reliable vaccines or preventative medicines approved by the FDA for traveller's diarrhea. Next slide, please. Just touch quickly on our technology platform. So this platform can work for any targeted pathogen, and that could be a bacteria or a virus. The first step is that we develop a specific vaccine for that pathogen, and then we inject the cow with that medicine. So we're not injecting humans, we're injecting the cow. And in response to that vaccine injection, the cow produces polyclonal antibodies. That's the word that struggled to pronounce before. And those antibodies are expressed in colostrum. That's the first milk that the cow provides to the calf. And you're probably familiar with the colostrum. It's taken as a health food supplement. And in of itself, it's very good because it's that first milk. But in addition to all those benefits, you also get the polyclonal antibodies for the targeted pathogen. And that neutralizes the toxin and clears it from the gut, stopping you from getting that infection. On the right, not approved by the FDA, but are approved in Australia, are the claims that we have for prevention and relief of traveller's diarrhea. So next slide, please. These are our latest sales results, and you can see in FY21, middle of COVID, almost zero sales, and a very strong uptick on sales going through to the current financial year. We're already at record sales for the history of the company. We've been selling this product in Australia since 2004, and there's another quarter to run. So hopefully it will extend beyond the reach of this particular chart. So next slide, please. I won't go through all of these milestones either, but you can see in there's some dates coming up for each of them. So Travelan, we have the clinical study report in June, July of this year. We have the Clostridioides difficile markers. This is a problem bacteria that causes problems to people in hospital, especially those that are immunocompromised. We are planning a pre-IND submission before the end of this financial year. The Uniformed Services University, completing enrolment close to the end of this financial year, and by the end of this calendar year, we're looking at releasing top-line results. And on the Camp ETEC program that I mentioned before, we're also looking at anticipated top-line results in June, July. Next program, please. Next slide, please. This is just another way of showing it. I like presenting this slide because it shows all of the things that we promised to the market and all of the things that we delivered. So anything in blue is something that we promised and we have delivered. And a number of those have happened in this financial year. And we have some upcoming milestones, those that I mentioned before, on the C. diff program, IMM 529, the Travelan Uniformed Services University study, the Travelan Phase 3 and the Camp ETEC Phase 3, rich milestones to drive value moving forward. Next slide, please. I joined Immuron about 18 months or so ago, and when I came in, due to that delay in clinical programs during COVID, I had a US market research and evaluation firm do an assessment of our two key pipeline products, so IMM 124E, Travelan, and IMM 529, that's the C. diff program. Wanted to make sure that the current standard of care and other products that are competing with us didn't mean that we shouldn't be advancing these any longer. And I was very pleased that they came back, and in both cases, so US market only assessment, of around $100 million revenue potential for both products, which underwrites the importance of moving these programs forward. Next slide, please. A question that I'm getting ahead likely to be asked about, what's next for Travelland? So IMM124E, we've just completed phase 2 and released those results and got a positive reaction from the share market. We're now moving into a phase 3 strategy. So when we submit the clinical study report in June, July, we'll have a meeting with the FDA. That's the end of phase 2 meeting. We will then talk to them about what trial design do we need for phase 3. It's likely to be 2 phase 3 trials of roughly 600 patients each of which will roughly take about 2 years. And the cost of those will be roughly $5 million each, and take that 2 years' time. Probably do them in parallel. So we'd type from start to finish, we're looking about 2 years. So earliest registration, I guess, for this product is probably around 2027 financial year. Next slide, please. I'm quite excited about this one. So IMM529, it's not as advanced as the other programs. So this is the one that we're preparing to submit the pre-IND by the end of this financial year. This is a big problem in hospitals. It's a product that can overcome some issues with antibiotics. So vancomycin, metronidazole, phytomoxicin are used in treating it, but a number of people, even after being treated and being cured, get it back again. So it's one of those recurring problems, an antimicrobial resistance issue. I probably should have mentioned this before. Our product is not antibiotic, and so it does not have any of those antimicrobial resistance issues. And importantly, the reason that the Lumanity feedback came back so positive, we have a triple mechanism of action, which is would be the first, and we're very excited that an oral product can come into this space with such great potential. So next slide, please. Oh, last slide. Here we go. So now open up for Q&A, David.
Thanks, Steve. Great presentation. And as you said, post-COVID, you've seen exceptional sales growth of the Travelland product. Do you think that can continue?
Look, I do, and I say that for a number of reasons. So firstly, in Australia, where most of our growth has been coming, for those of you that read the press, you may have seen that Bali has overtaken New Zealand as the number one destination for Australians, and this is one of those high-risk regions, and we're barely touching the surface of people that could benefit from our product. So as I mentioned before, there are no preventative traveller's diarrhoea products, and ours offers an opportunity for a holiday without diarrhoea. So in Australia alone, we can expect more growth. But we've also have the product on the market in US and Canada, and our sales are relatively low, and that's because we haven't invested significantly in sales and marketing efforts. We are starting to do that now. And recently in the US, so July last year, we launched on Amazon.com. Just last month, we launched on Walmart.com. And we're presently going through category reviews to try and get it into retail pharmacy in both the US and Canada. And we'll soon launch in Amazon in Canada as well. And Canada even itself is larger than Australia by population, with a similar market setting with retail pharmacy. US, a little bit different setting, but it has a much larger population. So that growth potential is very, very significant.
Well, having some friends just come back from Bali, they probably wish they had bought your product before leaving, and heading there later this year. So I'll make sure I jump on and get your product as well. Now, you have a strong collaboration with the US Department of Defense. Do you think they will collaborate on Travelland phase 3 trials?
That's a very good question. So when we released our phase 2 results, we did indicate that we will be seeking non-dilutive funding to assist with funding the phase 3 trial. So in the first slide, if you have a look there, as of end of December, we have about $15 million in cash, which is not too much less than our market cap. That can fund a lot of it, but obviously non-dilutive funding from grant sources like the Department of Defense is welcome, and they have funded most of our preclinical research, and we will be meeting with them. There's a military conference in May that Chief Scientific Officer, and I will be attending, and we will have those discussions about grant funding for phase 3 trials for Travelan.
And is there an opportunity to work or collaborate with other defence departments globally?
We already are indirectly. The Uniformed Services University study that I mentioned before, that has patients not only from active US military travelling to high-risk regions, but also UK as well. So in a sense, we're collaborating with UK military personnel as well. We haven't in Australia so much just because it's a much smaller market potential. But yes, as these trials progress and we get positive results, military around the world will be interested, and they validate, if you like, the technology, and we can use that in marketing efforts for the general consumer. The general consumer is still a much bigger market opportunity in that so many people now travel to exotic locations, many of which fall into those high-risk countries for travellers, diarrhoea and other pathogens.
Now, you mentioned the UK from a defence point of view. Is it a new market for Travelan? And how far away do you think you are from being able to sell into that market?
It is a potential market, and on the back of a successful launch in the US on Amazon.com, I'm cognizant that of the Amazon markets around the world, number 2 is Germany, closely followed by the UK. The UK for us has some advantages in that it's an English-speaking country, and we're more familiar with it. So it's very likely that in financial year 25, we'll be launching Travelan in the UK market.
Another good question, I assume, from a shareholder. If phase 3 Travelan work is successful, would the current 200 milligram multi-dose product be phased out and you'd revert essentially to a 1200 milligram dose, and would you sell that sort of in a singular form?
We don't have an answer for that question yet. We're not obliged to do that. It is possible to keep both an over-the-counter product and a prescription product on the market at the same time. I would imagine that the prescription product may have tighter specifications and some differences, whether that's in the active ingredient or the finished product formulation itself. And for that reason, the two products could coexist on the market. There's big advantages in having a prescription product approved in that at the moment, especially in the US market, we can't make label claims. So the claims that I showed before that we can make in Australia, we can't make in the US, which really precludes us from all of those people that generally seek healthcare practitioner advice before travelling to overseas locations. And that's roughly half of the market that we're not addressing. So there's big upside in launching an RX, but we don't really want to lose the OTC side. So we may choose to hang on to that in one form or the other.
Thanks, Stephen. Great presentation. Clearly a significant opportunity, big growth numbers, a lot of activity happening. Shareholders love to see that. So thanks for your time. We look forward to following the company with interest.
Very good. I'm just showing the scientific references. For those that are scientifically minded, this is references to the published papers for all of the preclinical and clinical research that we've done, both on Travelan and IMM529 for Clostridioides difficile. Thank you very much.
Brilliant. Thank you, Stephen. I would now like to introduce Allup Silica Limited, ASX code APS, and who will be presented by the Managing Director, Andrew Haythorpe. Allup is an innovative silica sand exploration company dedicated to identifying areas abundant in the precise type of sand required for the future production of highly refined, pure products, catering to the demands of the photovoltaic and other cutting-edge industries. Andrew, over to you.
Thank you, David, and thank you, ladies and gentlemen, for joining us this morning. If we may move on to the next slide, please. The all-important disclaimer, please read that at your leisure, and onto our corporate snapshot. Thank you very much. We have a very simple story to share with you this morning. It's about projects, purity and ports, and I'll go through that in due course. In terms of an overview of the company, though, from a corporate point of view, about 50% of the company is owned by directors and insiders. We set this company up about 4 years ago, just as COVID was getting started, so to speak, so recent history. We listed about nearly 2 years ago, almost exactly, and we're trading around 4.5 cents, give or take. In terms of our market capitalisation, and I'll probably touch on this again, we're very, very lowly capitalised at just over $3 million. My apologies. And currently shares on issue about 84 million shares. So we've got a very tight corporate structure, very clean and very simple. If we can move on to the next slide, please. Again, a tight, very experienced board of directors. Myself as managing director, Campbell Smythe, some of you may know, some of our investors certainly, has been in the markets for quite some time, and Gavin Ball, a very accomplished businessman, as our board of directors, and all shareholders with skin in the game. Thank you. Next slide, please. So let's get on to the company itself and the project. So we've basically got 4 projects, and we've been focused on 4 ports, and the reasons will become clear as I move through this. So what we've really been doing is evaluating high purity potential project areas that have access to ports that in turn have port capacity either immediately available or available without too much effort moving forwards. All of our projects are 100% owned. They're all located in West Australia. We have one to the north, Cabbage, which I'll talk about. And then we have several to the south, Sparkler, which is our main project, where we came out 2 years ago with an initial 70 million tonne inferred resource of silica sand. We've been doing progressive work on Sparkler as we move through de-risking that project. And more recently, we've been doing some work over towards Esperance at Pink Bark and June Buggy. So the focus of the company is dual focus, if you like. One is on the silica itself, and then also what are the logistics in terms of exporting and finding customers and delivering high purity product to our customers moving forwards. So if we move on to the next one, please. The ports in particular down south, our Sparkler project, we started at this project initially about three and a half years ago. And we were attracted to it because of its proximity to a major highway, and then connection of that highway through to Bunbury Port, where there is some capacity available, and Albany Port, which is another bulk tonnage export port here in West Australia. Our initial sampling was very encouraging. We would get silica grades in excess of 99% silica, and we've done subsequent work on that shows that with very simple washing and cleaning, we can improve the grades and the purity of that. So 70 million tonne JORC resource, more than enough for us to get started with. And if we can move on to the next slide, please. So just a closer look at Sparkler and where we did some drilling towards the end of last year. And that little area in the yellow odd shape is our inferred resource area, where we've increased the drill density, and we're working on improving the confidence as we go from JORC inferred resource and start to move it up the rankings. And there's some details on our mineral resource statement that we came out with. And with respect to the grades and the metallurgy that we've done, we can see that we can lift it to 99.5% silica purity, which is very encouraging from that photovoltaic sector that David just touched on in our introduction. And of course, equally important is getting low iron. So if we can move on to the next slide, please. And this is actually what the Sparkler Silica Sand project looks like. It's actually used low-value farmland. It's been under agricultural usage for decades. And we're looking for that high-purity silica, as I've mentioned. The good thing about high-purity silica is, unfortunately, from a farming and agricultural point of view, it's literally sand, almost beach sand. Therefore, from an agricultural value, it tends to be pretty low value. It's difficult ground to grow things on. The nutrient levels are very low. Clay content's low. In fact, all the things that make it a great sand deposit from a silica sand and a purity point of view is what makes it less attractive from a farming point of view. So this area is also, for that reason, attracted our attention early on, and that's why we've been back for multiple drill programs over the last couple of years, gathering further bulk samples and then working towards securing customers. Next slide, if we may, please. So in terms of high purity silica sand, this is a slide that shows the relatively raw silica sand on the top left corner. You can see little black dots and impurities, which is the way nature provides it. But as we move through screening and sizing the sand, we can improve the purity of it just by simple screening. Gravity separation using spirals, just water and letting gravity do the work to, again, separate the silica from the impurities. And then as a final stage, using magnets to pull any residual iron out of the silica, then gives us a very simple, very low cost processing to take it from raw silica sand in the ground and then upgrade it to the high 99+% level of silica, but also bringing that parts per million of iron down to around 100, which is specifically targeting the photovoltaic sector, i.e. solar panels. Thanks. Next one, please. So cabbage, the one to the north, we selected that again because we could see some high purity silica opportunity at surface from our initial work. And then initial sampling confirmed that in some areas we get very clean silica, which was a very pleasant surprise. And the good thing with cabbage is it's only 4 kilometres from the major highway number 1. And highway number 1, of course, connects through to Kununurra and onto Darwin. But what we're really interested in is the fact that it also connects through to Wyndham Port, which is about 90 kilometres from the project site by road to Wyndham. And one of the attractive, or 2 attractive things about Wyndham, one is the capacity is, let's say, very generous. It's very underutilised port. The second thing is being located in far northern Australia. It's got great proximity to the Asian markets, which of course is where a lot of Australia's commodities are destined for further processing and upgrading and turning into finished products, consumer products across the board. So Wyndham also has potentially a great freight advantage in terms of freight cost for us to deliver product to our customers. So that proximity is very interesting. The other encouraging thing about Northern Australia is there is federal money available for infrastructure and projects of merit. So, of course, we have our eyes firmly fixed on that sort of funding to assist us moving forwards with this project. If we can go on to the next slide, please. So in terms of just a closer look at cabbage, we've done some light exploration work, surface sampling, gridding across the silica sand that we've seen at surface. There's an indication of some of our traverses with silica sand samples, which we've sent off to the lab. And again, the grades that we're seeing coming back from the lab are very encouraging. So we're doing further work to see just how much we can lift that purity to from the cabbage silica area. We've also done microseismic, which defines the base of the sand unit, and of course digital elevation or surveys at surface, which gives us a surface topography. So we've again got a very encouraging handle on the volume of sand potential there before we get into more detailed drilling and metallurgical work as we move forwards. Thank you. Next slide. So in terms of a bit of an aerial view of cabbage, you can see highlighted to the top left-hand corner is some orangey coloured sand, which is not so much of interest because it does have higher iron content. You can see that reflected in that slide. But to the bottom right, you can see even though the silica grade might be a little bit less just on the raw grabs, the iron is also lower. So each silica deposit has its own unique characteristics, just like each port has its own unique characteristics as to where it's at with infrastructure and utilisation. So we look at each silica deposit and we do this very quick, very low cost cursory examination of looking at the silica grains under a microscope, seeing it to the lab, and seeing what's most amenable to giving us a high purity product with very low cost. So it's almost direct shipping ore is what we're looking at here, and a copy of the helicopter, photo of the helicopter there on site where we did this initial grab sampling program last year. Thank you. Next slide. So as I said, it's a very simple story. It's really about proximity of our high purity silica deposits to the ports, and in turn being able to then ship that tonnage from the ports to the customers. We've de-risked the project by we continue to focus on 2 or 3 projects at any point in time to see which one we can get across the line first in terms of production, signing up customers, financing going into commercial production. And we have a great opportunity, I think, to develop a whole new export industry, not completely new, I might add, but from a share market point of view, a new industry in terms of exporting a new high purity silica strategic commodity to the Asian markets and create a new industry opportunity for West Australia and Australia alike. And that's really the end of my presentation. Thank you very much. Last slide.
Thanks, Andrew. Great presentation. Interesting product, as you touched on. Just looking at demand, what are you seeing from a demand point of view for the product?
The market's at a very interesting stage. The world's largest exporter of high purity silica globally is actually Australia. It's actually far north Queensland, Cape Flattery, which some of the viewers might be familiar with. And Cape Flattery's been operating, I think, for just over 50 odd years now. But we understand that that project, which is 100% owned by the Japanese for the last at least 40 years, is running down from about 3.5 million tonnes per annum of export high purity silica, again, mostly into the Asian markets. That project is running down in terms of its ability to continue to produce. So with that immediate 3.5 million tonne sort of shortfall looming as we move forwards in coming years, that's creating new opportunities for junior resource companies such as Allup Silica. So we're very interested in that. And then also from a pricing point of view, if I may add, silica, especially the high purity silica, is really being pulled by very strong demand for solar panels, photovoltaic, solar panels like low iron content silica. That's what eliminates most of the deserts and most of the obvious places for sand supply around the world because of the iron staining that goes with a lot of desert sand. So the clean sand is what's actually quite difficult to locate. And that's where we've got these 4 projects that we're moving forwards with. And then, of course, the price is looking very encouraging because the cost of a solar panel, of course, is many hundreds of times more than the cost of the raw commodity. And the demand for solar panels is just growing all the time, and hence the demand for high purity silica sand. And as I just touched on, the world's largest exporter from Queensland is looking at reducing their production moving forwards as they get towards end of life of mine.
When do you start talking to potential offtake partners and or users?
We were being approached and contacted regularly right from the get-go about 3 years ago. So we maintain regular updates with the customers as they continue to scour around themselves to find new sources of supply, not just to meet imminent shortfalls perhaps from existing production, but also to meet their own expansion needs, because there's not much point building a big factory to produce more solar panels if you can't supply it with high purity silica. So it really is a chicken and egg that we're working with customers to resolve. And of course, in that, there's a business opportunity for us as a company and shareholders.
Now, you clearly went to the market with a proposition of focusing on infrastructure and being close to potential port solutions. Is the other sort of sell, if you like, the environmental advantages over peers?
Absolutely. One of the other things that's driving global supply of silica, just generally speaking, is ESG, of course, environmentally and socially responsible silica. And as soon as you apply that layer of governance requirement to existing supplies of silica sand, it gets even tougher, because most of the silica traditionally around the world has been mined near the coast, near cities, near major urban developments. And what's happened, of course, is urban encroachment. Our cities are growing, Perth, Sydney, Brisbane. You look at the urban sprawl over the last 20 years in Australian cities, let alone going to China, to some of their major coastal cities that have literally popped up in the last 30 years. So a lot of urban sprawl has actually literally overgrown the type of silica sand operations near cities. And then separately, when you get a bit further away, the desire for national parks and recreational parks and nice beaches without mining activities has also increased almost exponentially over the last 30 years. So you put all that together, and what you're looking at is increased demand and restricted supply. And these are long-term trends over decades. This is not just something that happened with an economic boom and bust in the last 12 months. So we think that the future for high purity silica with environmentally, socially sourced is significant blue sky and a very long-term positive future.
On that note, Andrew, thank you for your presentation. We look forward to following with interest.
David, thank you very much, ladies and gentlemen.
Great. Now I'd like to introduce our last presenter, who has hit the ASX with a significant amount of news flow in recent times. I'm talking of Strickland Metals Limited, ASX code STK, who is presented by their CEO, Paul Lepiniere. As I said, a strong amount of news flow, exciting company, A lot of questions already coming through, so look forward to following the presentation with interest. Paul, over to you.
Thanks, David. Firstly, I'd just say I'm not the MD or CEO just yet. That's jumping the gun a little bit. I'm coming on board 1st of July officially as part of this transformational acquisition of Rogozna. So Strickland announced this deal last Wednesday to the market, and it really is transformational for Strickland and its shareholders. So in this presentation today, I'm really going to delve into what is Rogozna. Well, why has Strickland pivoted and got this asset when they already have a very good asset in Western Australia? So hopefully I can help answer some of the questions about that. Next slide, please. So firstly, Rogozna is a really rare opportunity in the ASX junior space. This is a sort of project that traditionally only sits within a major. In fact, this specific project has been held by majors and more recently private equity for over 20 years. So it's never seen the light of day on the ASX. It's rare because it has significant scale. So already over 5 million ounce gold equivalent. Of that, about 60% is gold, 20% is copper. That's just in 2 deposits. So currently we've got 4 deposits defined by over 100,000 meters of drilling. So the other 2 deposits currently don't sit in resources, but they occupy a larger area than the existing resources. So the upside here is significant. In terms of location in Serbia, we'll touch on a bit more about Serbia shortly, but we are in an operating mining district in Serbia. So we're in the Trepča Mineral District, one of Europe's largest zinc, lead, silver mining districts historically. In terms of the team, myself and John Hronsky, partners of Iberia, we're stepping out of Iberia and joining the Strickland team as part of this transaction. But importantly, when you operate a project overseas, you need to have a really good team on the ground, and that's what we've got in Serbia. We inherited a really high quality team from Eldorado Gold, and we've put a couple of extra people in that to really complement that team. So we've got a really high class team on the ground day in, day out in Serbia driving this project. In terms of value, we also had over 60 million Australian spent to date on the project over the last 20 years, including about 25 million over the last 4 years. In terms of the acquisition, Strickland shareholders are getting a very good deal here, roughly 37 million deal value. The majority of that is in escrowed Strickland shares for 18 months. And just moving forward with our exploration plan, we're going to hit this project really hard from the beginning of June with about 60,000 meters of diamond drilling, and that'll substantially grow the existing resources and test a whole heap of targets as well. Next slide. So a bit of the history of Rogozna, and this is pretty important to give people an idea of the context of this project. So Iberia acquired this project from Eldorado Gold in late 2019. Iberia at the time were looking for assets in the region fundamentally because we were so impressed with what Adriatic Metals had done. And as the guy in charge of finding new projects at Iberia, I just thought there had to be other opportunities like Adriatic in this region. So we did 6 months of project generation in 2019. And during that time, we became aware that Eldorado Gold were looking to sell. Now, at the time, why were Eldorado looking to sell? Well, at the time, their mining operations were not performing. They'd had 6 months of negative cash flow, and this project only had 1 year left on its license. So basically, the exploration team at Eldorado were told, get out of all exploration projects. You have no budget for the foreseeable future. And this specific project only had 1 year left. So we were just in the right place at the right time and managed to acquire this off Eldorado by late 2019. Now, what happened in the first 6 to 12 months of our ownership at Iberia? So we got the main license renewed for a new 8 years. We acquired 2 additional licenses, which now gave us 185 square kilometres. And we made 2 new discoveries in our first drill program, one at Gradina North and one at Medenabats. So here we are today with over 5 million ounce resource gold equivalent, and Strickland will soon be the proud owners of this asset. And moving forward, we expect a lot of strong news flow. Next slide. So in terms of Serbia, a lot of people in Australia aren't that familiar with Serbia, and fair enough. But what I can tell you about Serbia, and I've worked in over 20 countries around the world, is Serbia is definitely up there with the best of them. So it's actually Europe's second largest copper producer behind Russia. And the reason for that is it's got a whole heap of giant deposits. So in the east of the country, in the Bor region, you've got a number of operating copper gold mines. Zijin Mining out of China have recently invested billions of dollars in that region, both acquiring Chikara Peki and stakes in Bor, but also developing Chikara Peki over the last 2 years. Where we're located is in the Trepča district. As I said, this is a historical zinc, lead, silver district with over 30 million tonnes of production historically. And the other thing that's really good about the country is not only do you have all the skill sets that you need with a mining jurisdiction, but you've got good quality infrastructure, and because the combination of geology, a pretty modern mining code, very favourable fiscal terms of 15% corporate tax. All the majors are in the country. So you've got Rio Tinto, BHP, Vale, Zijin, Dundee, Kinross, and also Newmont are on the other side of the border in Kosovo as well. Next slide. Okay, geologically speaking, what we've got here are porphyry-related deposits, but there's a key differentiator between these and porphyry. So our deposits are skarn-hosted gold and base metal deposits. The key difference between a skarn and a porphyry is within a skarn, you actually get a lot of high-grade zones. And over the next couple of slides, I'll show you what those look like. On this slide on the left here, this shows a plan view of our licenses. So we've got 4 licenses comprising roughly 185 square kilometres. In the southern part of the license, we have the 2 resources, Shinats and Copper Canyon. We've also got another drill-defined deposit called Gradina. And then in the north of the main license, we've got Mladenovec. We've got an operating mine, a Srinats lead zinc mine, which is located 4 kilometres from our Shinats deposit. So these deposits form a cluster. So they're not far apart. In fact, from a mining perspective, they'll all feed a centralised plant. On the right-hand side here, we're looking at a long section from the south at Copper Canyon through Shinats and up to Mladenovec. So Copper Canyon outcrops, we've got basically 800,000 ounce gold equivalent at surface there. At depth, we've got another deposit, Copper Canyon South, which is gold only. Shinats starts at about 80 metres depth and is open at depth and to the north. And then we've got Mladenovec, which is our recent discovery, including in the guts of Mladenovec, where we hit almost 100 metres at 5 grams gold equivalent within a broader sort of 350 metres at 2 grams. Next slide. So one of the key aspects of this project is really the optionality. So with each of these deposits, you generally, when you're drilling them, you get a very broad, lower grade intersection, generally anything from 100 to 400 metres thick, running 1 to 2 grams gold equivalent. And then within that zone, you'll normally get anywhere from 1 to 4 high grade intervals, generally 10 to 50 metres thick, up to 97 metres thick at Mladenovec, and the grade within those zones generally runs between 3 and 6 grams gold equivalent. So you get a level of optionality on the grade tonnage curve from bulk scale, bulk tonnage, down to more moderate scale, higher grades. And then each of these deposits has a slightly different metals mix. So Copper Canyon is roughly 50-50 copper gold. Gradina is basically 90% gold. Shinats is 80% gold and copper, and Mladenovec is 60% copper and zinc. So you also get a level of optionality around which of these deposits do you want to hit first and bring online first? Do you want the more copper-rich deposits because of obviously all that the copper demand moving forward? Obviously, gold price is really good at the moment. So do we hit Gradina harder because that's 90% gold and it's the highest grade gold? So as I said, this project has a lot of levels of optionality built into it. Next slide. Okay, Shinats. So Shinats is currently the most advanced deposit. This one's got 4.6 million ounce gold equivalent. But a really key aspect of Shanac is within this bulk tonnage ore body, you've got a very nice, relatively coherent high-grade zone. So on this long section here, the high-grade zone averages 25 meters thick at about 3.3 grams gold equivalent. So whilst the overall ore body is a big bulk tonnage, lower grade ore body, within that, you've actually got an ore body within it that's actually higher grade. And through the guts of that deposit, you've got up to 20,000 ounces per vertical meter, which is pretty much unheard of in Australian projects. The other key aspect of this deposit, the current bulk block model, there's no constraining or domaining of the high grade zones, and it's a diluted MIK model. So the actual grades within this deposit are actually higher than what's in the model. Next slide. Okay, Medenovac, so similar story to Shanac in terms of you've got a high grade core within a big bulk tonnage deposit. In the case of Medenovac, the guts of that core is roughly 5 grams gold equivalent and almost 100 meters thick. It's been drilled along 600 meters of strike. But the other key thing for Medenovac is there's actually 2 parallel zones of mineralization. So one at Chesme, there's one old hole there, over 100 meters of mineralization, including roughly 36 meters at 3 grams gold equivalent. And at Kotlolvi, there's no drilling, but we've got the IP anomaly, which maps the alteration above these deposits. And we've got outcropping mineralization in the volcanics. The other key aspect from Medenovac is all of the geophysical data sets, all of the drilling, all of the alteration points to there being strong potential for a porphyry at depth here. So in that bottom right-hand image, what we're looking at there, you've got a large magnetic anomaly sitting underneath the skarn deposit. And this is the same spatial context that you'll get in all the giant porphyry deposits such as Erzberg and Grasberg. Next slide. Okay, Gradina. So this is back to the south. So this is about a kilometre away to the south of Shanac. So this is the highest grade gold deposit. It's got very simple metallurgy, over 86% met recovery. Key thing for Gradina is it actually hasn't been drilled near surface. So the reason for that being is the access tracks here through the valley to the west. And we've got some serious drill hits, 50 meters up to almost 5 grams gold. A lot, generally multiple loads, 10 to 30 meters thick. And it's all up dip towards surface where we've got soil samples running up to 1 gram gold. The density anomaly also projects towards surface as well. So one of the first things we'll be doing in June is putting a track in up the hill here and drilling it at shallow levels. Next slide. Okay, just 500 meters to the east of Gradina, we've got Copper Canyon. This is essentially a 50-meter thick blanket of copper gold running 1 gram gold and 1% copper surrounded by a lower grade halo. It's got 800,000 ounce gold equivalent in a $2,000 pit, and about 200 meters underneath that, we've got a gold only deposit called Copper Canyon South, which has got a few drill holes, including almost 40 meters at 3.7 grams. And that doesn't sit in any resource at this stage. Next slide. In terms of exploration, so one of the great things about this deal for both parties is, this is a serious project and we're going to be able to hit it really hard and do it justice. So 60,000 meters of diamond drilling planned over the next 18 months. A bit over half of that will be resource drilling focused on Medenovac, Gradina and Shanac. So we are aiming to double the resource within the next 12 months. But just as important, we're going to drill at least 25,000 meters of exploration holes. So we've got a target pipeline of over 20 targets. Several of those already have significant intercepts. So we're really only 1 or 2 deposits away from, showing that this project has the potential to get north of 20 million ounce gold equivalent. Next slide. So in summary, really what I'm hoping investors, including existing shareholders, walk away with today is really an understanding of what this project can deliver. and and ask yourself the question, what do you think this project will be worth when we double the resources over the next 12 months? What do you think it will be worth if we find one or two more new deposits, and start providing that visibility towards 20 million ounce gold equivalent? Because once we have that visibility, this project is firmly within the top 50 projects globally. And then if we can emulate the success of Adriatic Metals and push this project through studies and towards development on that sort of scale of resource, what do you think this project and Strickland Metals will be worth at that point? And that's really it.
Thanks, Paul. Great presentation. Significant acquisition, as you mentioned, and clearly going all in on Strickland. So shareholders love to see that. A stack of questions, and I'm going to try and sort of group them together to make it easier to answer. Particularly, or focusing initially on Serbia, what is the operating environment like, and what is the permitting process like?
So from the operating environment, it's one of the easier places I've worked. I've worked a heap in Africa and Asia and Australia. So operating, I can call my guys today and say, can we start drilling in a week? And I'll have a rig there in a week, and we've got all the approvals in place already to drill. So drilling cost-wise, Serbia's relatively low cost. So diamond drilling all-in costs about $110 a meter. So that's probably 30% cheaper than Australia. And there's plenty of rigs available because of the mining industry there. So certainly operationally and getting the job done, I find it really straightforward. Permitting from the exploration side of things, we found it to be quite straightforward. You get 8 years of exploration license before you need to convert to a mining license. So we've used the first 3 years already. So we've still got 5 years to go on the main license. To convert to a mining license, you only need to have inferred resources by JORC standards. So once we've drilled Medenovats and Gradina to resources, there's nothing stopping us from starting that permitting process for that main license.
And in terms of metallurgy, a couple of questions here. How much work's been done, and have you got any results to speak of?
Yep. So we've been doing metallurgy work since we first acquired the project. So we spent about $500,000 to date on met test work. It was certainly one of the question marks when we were doing DD on the project in 2019. There hadn't been much med test work. And as most people would understand, polymetallic deposits can be quite tricky. So we've done met test work on all 4 deposits. The results to date have been very positive. So for 3 of those deposits, we've pretty much identified the flow sheet with acceptable sort of roughly 80% recoveries. So Copper Canyon, you get over 90% copper recovery. Shanats, you get basically 80% copper gold recovery. Gradina, you get 86% gold recovery. The one deposit to date where it's been a bit trickier has been Medenovats because of the higher zinc content, and zinc being mainly sphalerite and chalcopyrite for the copper. They have similar float characteristics. So to date, for Medenovats, we've got very good zinc recoveries, over 80%, but the best copper recovery we've got for Medenovats so far is about 75%. So Medenovats needs a fair bit more work and a lot more drilling. It's obviously the least drilled of the deposits as well, but certainly, the early indications are very good.
And what evidence is there to support the porphyry, copper, gold, and other resource upside potential?
On the porphyry front, so generally if you've got a scan system of this scale, there's a general rule, which is firstly, you're 10 times more likely to have a mineralized porphyry nearby. But certainly specific evidence, so for Medenovats, for example, in the drilling at Medenovats, we've got high sulfidation epithermal veins in the base of the deeper parts of the holes, and these are sort of veins you typically get sitting above a porphyry. We've also got the geophysical anomalies, so we've got a very large remnant magnetism anomaly sitting beneath Medenovats. We've got a very large resistor as well in the EM data, which is what you'd also expect in a porphyry environment. And then you've got the alteration. So Medenovats has really strong hematite alteration So it's indicative of an oxidized system. Oxidized systems are more likely to give you porphyry copper gold mineralization. In terms of the other upside, just in the skarn style deposits, as I said, we've got Copper Canyon South, which has got already drill holes into it. We've got Chesme, which has got drill holes into it. We've got Jezerska Reka, which we discovered last year, has 800 meters of alteration and mineralization from surface. So we've got 3 or 4 prospects already that we know are mineralized and just need more drilling. And that's not including the other 15 or 20 targets on top of that.
Now, I understand you do have drill results pending. What's your expected timeline on delivering those to market?
So now that we've announced this deal, we'll send those samples to the lab. We drilled 2 holes earlier this year in January, February at Medenovac. And so we'll send those samples to the lab now. We should get those results in the next 3 to 4 weeks.
A good question here. Clearly a shareholder who knows their business. Copper Canyon has some shallow near surface mineralization. Is open pit an option there and elsewhere?
So open pit, so it's obviously been optimized open pit, and it's technically doable. In terms of whether we want to down the track develop Copper Canyon as an open pit, I think time will tell on that. Certainly, all the other deposits are underground, and we're very comfortable with that. All the historical mines in the Trepcha district are predominantly underground. There is small open pits around the place, including at that Shrinats mine, but certainly for us, Copper Canyon as an open pit isn't forefront of our mind at the moment.
And a good question here, when people look at investing in resources companies, sometimes they're explorers, sometimes they're developers, sometimes they've got an eye on production. Where do you see you and the new management team coming in? Are you focused on getting these into production, or are you looking to just explore them to grow them as big as possible?
So at the moment, certainly our initial focus is to do the drilling and the exploration work to grow this as quickly as possible. But importantly, in the background to all of this, we will be doing all the study work as well. So I think you don't need to look much further, for example, than Adriatic Metals, and I have a lot of respect for Paul Cronin and those guys with what they've been able to achieve there in Bosnia. And that's certainly a pathway that we'll be following. But, I'll be also very surprised if a major doesn't, want to get involved with this project at some point in the near future.
Now, there is a question on the WA assets. So the Yandal project in WA is showing a lot of promise. Is there intention to produce that asset or to continue selling it to the likes of a neighbour? So you're going to continue with the asset, or
yeah,
are you going to open?
That's a really important part of the story as well. So certainly from an Iberia perspective, we really love that asset, and obviously Strickland and its shareholders love that asset too. So we think it's really complementary. It's of high strategic value. So the exploration plan for the Yandal actually doesn't change at all. We've got 2 rigs there now. We're going to continue hitting that project really hard as well, because obviously the value of any ounces we find there are huge given the proximity to Jundee. And certainly, we're not shying away from the fact that, we can grow that resource pretty quickly as well to sort of north of 500,000 ounces. That there's, high potential to do another Northern Star deal there as well.
Paul, a great presentation, clearly a transformative acquisition that's excited not only your shareholders, but the market generally. Incoming CEO, but clearly all in on Strickland Metals and its assets. So we look forward to watching with interest. Thanks for your time.
Thanks, Dave.
As I said in my introduction, the purpose of this webinar series is to give you the opportunity to engage directly with companies that are on your watch list, or to give you ideas of companies you might want to potentially add to your watch list to follow them in future. So look at your watch list. Let us know if there are any companies on there you want to hear from, or companies you're doing a little bit of research on that you want to hear from as well. I'd like to thank each of you for watching and being part of today's webinar, and for each of the company presenters for the introduction to their respective companies and the value proposition they present. We'll see you again in a few weeks' time. Thanks everybody for your time.